Welcome back to the Daily Journal. So let's look at the New York session, how I got to my bias, which is bullish. You'll have to check out the 2 a.m. video from a trade earlier that day. I'll link that in the description, and I'll give a full breakdown of my daily bias with the daily market making model and how I got to this as my drawn liquidity. All right, so what you'll also notice is that I'd marked out these highs as well, right? This is just low hanging fruit. So this is my main target. This is low hanging fruit. Now going into the session, this is the 4-hour chart. I was looking for price to trade into this 4-hour fair value gap. What we also have here is this order block, right? So looking at this level here, I'm bullish, right? The order flow is bullish. And so I'm looking for price to continue from this zone, right? And this is just a classic continuation model, right? This is the high time frame continuation model. It's really as simple as price has displaced higher, it's left behind a fair value gap, price trades back into rebalance at inefficiency, and then trade up to liquidity, right? And those are the two reasons why the market moves, is to seek liquidity and rebalance inefficiencies, right? It's all about efficiency in these markets because it's all about making money for the market makers. So we look to trade on side with these guys, and when you look down to the 50-minute chart, I expect a 50-minute market maker model to deliver the continuation of the 4-hour chart, right? The 4-hour was my high time frame continuation model, so I expect price to trade back to an inefficiency and then trade higher to continue with the bullish order flow. Okay, so at this point, I'm looking at the open to see what price gets up to, and then also 10 a.m. Because right now this is bearish, okay, and we've traded below that 4-hour fair value gap, which is fine, right? Because the wicks did the damage, the body tells the narrative, and also look, we're trading into this 50-minute fair value gap, also trading into this order block, etc., right? So we got plenty support here, and there's no reason to be bearish until the 10 a.m. opens, right? Because we don't know how the 6 a.m. candle is going to close, and we're in bullish support here, sell side liquidity, that fair value gap, etc. We got bullish high time frame order flow. So when I got to the charts at the basically just after 9, I started seeing this run up. So let me just take it back a step, because when I dropped down to the 1 minute, I can see this swing low forming on the 15-minute, right? So this is getting bullish, but this would be the 15-minute change state delivery up here. So for me, I need a confirmation earlier on. Otherwise, bearing in mind that my high time frame targets is above, but this is the low hanging fruit. This is the market maker model, right? There's a original consolidation, there's a sell-off, this is manipulation, and this is the distribution, right? So when I looked at the 1 minute chart, price has a change state delivery here, which is over there. There's also a bullish breaker where price traded back into, and this is clearly trading to the upside. And also when I take my standard deviation, I'm going to use this point over here simply because when I take it like this, that takes me up to the 50 minutes change state delivery. But what you'll find is this is what I'm actually going for, because it lines up with high time frame PD arrays. Okay, yes, this is the 1 minute. If I just want to use the 1 minute and trade the 1 minute as my high time frame per se, then great, I'll trade towards this liquidity over here, right? So this 15 minutes gap. So, or not gap, sorry, this is the 50 minutes order block. So what I'm looking for is high time frame. So I'm using more time essentially, right? And that lines up perfectly with this market maker model. And this is how it works. That's when I know I got the correct standard deviation, or rather the correct swing points to calculate my standard deviation. And you can see this is the last swing high as price then delivered straight into the points of the shift, right? The reversal. So I'm looking at this as one down close leg. And if I had to look for like 5-minute charts or, there we go. You see go to the 3 minutes. You'll see it's a main swing high. Okay, it's not a swing points because it doesn't have candles on either side. But when you look at the 3-minute chart, for example, you can see this is one sequence before the change state delivery on the 3-minute charts. Right, and that's just sometimes how you get at it. And you can see how much cleaner is that on the 3 minutes. And when we look at the 5-minute charts, right, there's no, you can't, the change state delivery comes over here. So the 3-minute chart, this is actually clean. It's not what I was using. I was looking at the 1-minute charts. I was like, great, that works. And I just know from experience that if you had to play around with price, different time frames, because price is fractal, it works out. When price action is clean, you'll get, you know, the standard, something standard like that, and it'll work out. Okay, so going into the session, going into the open, I'm just looking for price to do something like this, right? I wanted to see price trade back into a lower time frame PD array. But here's the thing: going into the session, look at how the 6 a.m. candle is looking, and look at how the start of that new 50-minute candle. Now I know from stats that if the first 50-minute candle is bullish, closes bullish, the rest of the session most probably will be bullish. So knowing that this is a market maker model, and that we've taken out all the sell side with this massive manipulation, I'm not expecting price to drop lower. I'm expecting buy side liquidity to get taken out first. So with that in mind, the moment I see price, and I mean, look at that, right? Look at the wick has been formed and it's just closed above. The moment I saw that closing, I'll actually just win a market order in, my stop loss at this low, and I targeted, I think it actually was a little lower because it worked out to almost 2R. Let's see over here, right? And yeah, so literally just entered in. This is just such an easy trade, because here's the thing: it initially dropped down into this rebalance, immediate rebalance of that efficiency, and closed back above the opening of that candle, the level, and I expected just an easy trade. So that was for me done. I wasn't about to hold any longer. Yes, I could have held on for this, but the thing is, once buy side liquidity has been taken, I expect price to revisit, and at the very least, I expect price to take out the opening sell side liquidity, right? And let's just play this out, because it's exactly what happens. I didn't take a second trade though, because one and done. And so you can see price now consolidates around there, and look what happens. Now at this point, everyone's getting bearish, right? But remember, we've got these high time frame levels. That's where I'm expecting the high time frame. I mean, I'm sitting on the 1-minute chart. This pullback isn't something you should worry about. In fact, when you pull back, because now remember, on the 15-minute chart, we've got this change in state delivery. So, or about to at least, right? So I'm looking at this. This is still an order block. It hasn't been confirmed yet, but I'm anticipating it because I've got higher targets. But here's the thing with the model, right? You don't have to play the guessing game. I'm not saying just enter just on the bias. You got to have a market maker model, and then confirmation that the market maker model is now shifting from accumulation to distribution. So I know that once price has dropped into this, I'm expecting price, after taking out the opening sell side liquidity, this is time-based liquidity, it's the opening sell side liquidity. Once that is swept, you can actually drop to the 30-second chart. 15-second chart is actually what I was looking at. And the reason being is because when I'm on the 1-minute charts, it's not giving me the information I need. Now, I know that price action is bullish. I need confirmation. So what I can see here is that when I looked at ES, I saw there was still these relative highs, which is fantastic. Okay, I've got my low time frame drawn liquidity. I've got my high time frame drawn liquidity. Okay. So when I look at this on the 30-second and the in the 1 minute, I'm not getting the information I need. Now I can see a market maker model clearly. I can see all those swing failures. I see inefficiencies, and I know I've got these relative highs, and I've got high time frame targets above. Right, so it's reacted off that 15-minute fair value gap. We've also, order block. We also have swept the opening sell side liquidity. Now what I'd want to see is a change state delivery. So what you'll notice is that once price gets above this, you'll only see price delivered to the upside. And there we go. Now if you are unsure, okay, we'll just check the time here. There it is at the 9:45 macro. So this is perfect. You get your entry at or around about the 945, fantastic. So what I like to do is typically just market order in. Now this is the trade I actually should have waited for. This is an A plus setup. That right there is just me having conviction in my drawn liquidity. I would have much preferred, and here's the thing, right? This is because I expected price to just consolidate and trade higher. Unfortunately, I didn't have enough patience. I took low-hanging fruits and only got 1.5 hour because of it. Right? The rules are one and done, and I had to sit and I had to watch this play out, which was frustrating. But it's been a very challenging week. So I wasn't about to break any rules, and I'd already had a loss that day, a small loss. So I'd already had one loss. I just had to win, rather just call it quits being ahead on the day. But here's the pain: is that I love executing my model. So to see this play out was absolute pain. But that's the thing, you got to sit with it and just remember why you have to wait for A plus setups. You can see, so, and this is another reason why I always either market order in, right? Or what you could have done there, if you didn't want to go for the reversal, you could go for the continuation, which is to say you wait for price to trade back into, and this is, remember I mentioned about the high time frame continuation model? What do we see here? This exact same thing. You're now on a low time frame continuation model, which is what you want to see because I'm trading the smart money continuation. This is a smart money reversal, which confirms the shift from market makers accumulating long positions to now distributing long positions. So once I get the smart money reversal, I'm looking for continuation of distribution. So when price trades back into this inefficiency, expands higher, I'm looking for price to come back to this order block and continue higher. So let's just say I was actually waiting for this order block, didn't get it. This is a breaker block, so I think that's where it bounced at, and you can use the wick for that. So let's say I didn't get a fill for whatever reason, and this is again why I always market order in, right? Sometimes you just get a tap and go, and with futures, the spreads are basically non-existent, so you don't have to worry about that. But here's the thing, had I market order in, where would my stop loss be? Well, I'd use this because price had traded back into this inefficiency and closed above that. So that's what I would have used it, right? And this would be my low-hanging fruits. Of course, my targets were higher. That's still a banger, right? But look at that, 3R. Now what do I do if I use this as my limit order, which is always going to be a better fill, and this would be my protected low. Why? Because price has already achieved the objective of seeking to rebalance this inefficiency. And with the continuation models, your protected lows will remain protected until such time that distribution is complete. So look at how this changed to 11R. So again, if I had taken that trade, typically I like to add a small position here and then add to my, add a position here and then add a small amount to my position here, so as to not bring up my my average entry too much. And this is my model down to T, which I'm still trying to master, is trading and mastering the distribution side of a market maker model. Because the reality is I would have taken off most of my position here and then hold on to runners, right? Because this is a hard time frame pool of liquidity, you could get a reversal, you never know. You can see as price got above those highs, we just traded higher until such time that we hit the that hard time frame pool of liquidity. So look at that absolute banger of and let's just move this forward. And there we go. So you can see once that objective was hit, look what price did. It came straight back down and took out sell side liquidity. So beautiful delivery. And this is again a lesson, right? Normal people learn from the mistakes, smart people learn from others. Learn from my mistake here, right? So this was just me, this is greed kicking in. This is not me not having belief in myself and my model, such that I'm not patient enough to wait for an A plus setup. I knew this was my drawn liquidity. I knew price was most probably going to go here, and I went for a quick win right? When I should have just sat and waited for the 9:45 macro like I always do for my A plus setup, and it would have delivered tenfold. So that's my journaling for today. I'll be looking at that to practice that over the weekend, especially over the break in December. And you can expect me to execute many of these A plus models in 2026. So I'll see you guys then. Cheers.